It's Saturday night, the markets are closed, but when they open on Monday, billions could move in seconds, because what just happened between the US and Iran just changed everything. On Friday, Iran shot down a US fighter jet and hit multiple rescue aircraft for the first time in decades. American air power was directly challenged, and markets are not ready for what this means. This is a Black Monday setup, and here's what could happen when the bell rings. If you want real-time breakdowns like this, not headlines, but what actually moves markets, hit subscribe now, because Monday could be one of the most important opens of 2026. Let me give you the full picture, because to understand why Monday is so dangerous, you need to understand the sequence of events that brought us here. The US-Iran war started February 28th. For 5 weeks, the Trump administration had been telling markets and the public that Iran was essentially finished. Pete Hegseth said the US had achieved air dominance. Trump said the war was nearly won, and just 2 days before the jet was shot down, Trump told a national prime time audience that Iran's ability to threaten us aircraft was completely gone. His exact words: "We are unstoppable as a military force." That claim just got shot out of the sky over central Iran, and this is where things get dangerous. Because here is what the down jet tells you that no press release ever will. Iran still has functional, effective air defense capability. After 5 weeks of the most intensive US bombing campaign since Iraq in 2003, after thousands of strikes, after all the claims of dominance, Iran Zerg used what their state media called a new advanced air defense system to bring down a frontline American combat aircraft, and then they hit the rescue team that came to get the crew. That is not the behavior of a military that has been completely decimated. That is the behavior of a military that is still very much in the fight. Markets do not like this revelation. Not one bit. Now let us talk about silver sitting at $73 and why Monday's open is so critical. Here's the twist: most people miss war is actually bad for silver right now, because higher oil means higher inflation, which means the Fed can't cut rates, which strengthens the dollar. And that puts pressure on silver. So you get this brutal, counterintuitive dynamic where the war escalates, things look worse geopolitically, and silver drops. Not because the fundamental case for silver changed, but because the macro transmission runs in exactly the wrong direction. This is what analysts are calling a macro override. The traditional safe haven playbook got overridden by the macro consequences of the war itself, and silver has already paid the price, dropping from its all-time high of $121 in January all the way down to $73 today, a 40% collapse, while the war that was supposed to drive safe haven demand actually drove the dollar and yields higher instead. And on Monday, that dynamic gets stress tested again with the worst possible news backdrop. This is the part nobody is pricing in. The down def 15 does 3 things to the market at the same time. First, it destroys the war ending soon narrative. That was the one thing keeping markets somewhat calm. The idea that in 2 to 3 weeks, Trump wraps this up, the strait reopens, oil comes down, and everything normalizes. The F-15 shoot-down blows that timeline apart. If Iran can still hit American aircraft after 5 weeks of the most intense air campaign in a generation, this war is not ending on Trump's schedule. Second, it massively raises escalation risk. Trump has staked enormous personal credibility on the claim that America is dominant and Iran is finished. That claim is now publicly embarrassed in front of the entire world. Trump does not absorb public embarrassment quietly. The probability that he responds with a dramatic new escalation, hitting power plants, bombing oil infrastructure, threatening ground troops, just went up significantly, and every escalation keeps oil higher, keeps the dollar stronger, keeps rate cuts further away, and keeps silver under pressure. Third, and this is what could shock the market, there is a missing US pilot on Iranian soil right now with a government-backed bounty on his head. That is not just a humanitarian tragedy, that is a political and military crisis that will dominate every news cycle all week long. Every hour that pilot is missing is an hour that escalation risk stays at maximum. Every piece of footage Iranian state media puts out is a political problem for Trump, and political crises create volatility. Silver sitting right at $73 is one bad headline away from breaking its support zone. So what happens when markets open Monday? There are only 3 paths from here, and each one could move silver fast. In the first path, the controlled reaction, markets open lower but absorb the shock. Stocks sell off 1–2%, silver tests $70 to $71, oil holds above $100, the dollar strengthens, gold drops another 1–2%, Trump doubles down verbally but does not immediately order a massive new escalation. Markets stabilize by midweek as the news cycle moves on. This is the most likely short-term outcome if the weekend stays relatively quiet and no major new military action happens before Monday morning. In the second path, the escalation spiral, and this is where things get really dangerous. Trump responds to the humiliation of the down jet with a dramatic new strike over the weekend. He hits Iranian power plants, he threatens ground troops, he announces a complete blockade of Iranian ports, oil spikes past $115, the dollar surges, Treasury yields spike, and silver does not go to $70. It goes to $65, maybe $60. The entire market reprices around the idea that this war is 6 months away from ending, not 6 weeks. Rate cuts in 2026 get taken completely off the table, and silver's industrial demand story gets completely eclipsed by the macro sledgehammer of a ripping dollar and surging yields. In the third path, the pivot, something surprising happens over the weekend. Pakistan brokers an emergency back-channel meeting. Iran quietly returns the missing pilot as a gesture of goodwill, or Trump facing severe domestic political pressure from a public that never fully supported this war signals that a real ceasefire is close. Oil drops $15 in a single session. The dollar weakens sharply, and silver, which has been brutally oversold from $121 down to $73, bounces violently. A 10 to 15% move in silver in a single day is entirely within its historical range. This is the scenario the smart money is watching because a silver bounce from oversold conditions on a ceasefire signal would be one of the fastest and most explosive moves in the entire commodity market. And this is what could shock the market. The pivot scenario is more possible right now than most people realize, because Trump himself said this week the war could end very soon, because Pakistan has been actively mediating, because the missing pilot creates enormous domestic political pressure to find an off-ramp. The war ending is not a fantasy. It is an event with a meaningful probability that the market is currently not pricing in. Now here is what makes this setup genuinely extraordinary from a market structure perspective. Silver at $73 is sitting on top of a foundation that has never been stronger in its history. 6 consecutive years of global supply deficits, COMEX inventories down 70% since 2020, Shanghai physical premiums still elevated above paper prices, China's export controls still restricting global silver flows, industrial demand from solar, EVs, AI data centers, and nuclear power growing structurally year after year, a gold-to-silver ratio that implies silver at $73 with gold above $4,600 is deeply mispriced relative to historical norms. This is the exact combination that creates monster moves in commodity markets, a metal with an unassailable long-term fundamental case, temporarily beaten down by short-term macro headwinds that are real but finite, sitting at a critical technical support level with a binary catalyst event, the end of the Iran war, that could flip the entire macro environment in a matter of hours. The traders who made the most money in silver's previous explosive moves were not the ones who bought at the absolute bottom. They were the ones who understood the setup before the catalyst hit, who understood why silver was being suppressed, who understood what single event would change that suppression overnight, and who were already positioned when the flip happened. Right now, watch one number above everything else. $72.50. That is the line in the sand for Monday. Silver has tested the $72 to $73 zone multiple times in recent weeks and bounced each time. Physical buyers, real industrial users, Asian sovereign funds, large institutional accounts have been stepping in at these levels every single time. If $72.50 holds on Monday's open, it tells you the physical demand floor is doing its job. The paper market can push the price down on macro fear, but it cannot push it through the floor of real industrial must-have demand. If $72.50 breaks on a high-volume move, the next support is around $68, and below $68, the air thins out quickly towards $60 to $65. That single number, $72.50, will tell you more about what the silver market really thinks than any analyst commentary or bank forecast this week. Silver at $73. Doesn't look dramatic right now, but markets don't move when things are obvious. They move when something breaks, and Monday might be that moment. Subscribe. I will be watching all weekend. The missing pilot, the Trump response, the Sunday futures open, the Monday reaction, all of it covered, all of it explained, all of it in real time. See you Monday.